and then price action after. Okay, cool. So you're set up. You're set up waiting for something to happen. Well, I suppose the first things first is we'll have a look at natural gas. But before we get started, anyone on YouTube, because this will be on YouTube shortly later, anyone on YouTube, please click the follow and the like button. And that means then you don't miss out on any of the content or anything that I go through. And if you have anyone who would benefit from what I've gone through, don't be afraid to share the YouTube link with them. Okay, so we're going to start off with natural gas. Okay, so we're going to start off with natural gas. And natural gas has had this unmerciful pump, and now it's on the way down at the present moment. Now, could we have anticipated that drop? Not as much, no. Not as much, no. We couldn't. We can anticipate the jump, but because the fundamentals are still good, because there's still a massive shortage, because of all this, we couldn't really anticipate this drop. But in your opinion, where will this drop stop? Where will it come back to? Where do you think that will be the next point that buyers will become interested in this? Because remember, we're not looking to just jump in on a trade for the sake of jumping in on a trade. We have to get in at a correct area, at a correct time. There's no point in just jumping in on a trade just for the sake of it. We have to make sure we're jumping in at the correct times, in the correct areas, so on and so forth. So where do we think that the correct area for this would be to come back down to? Where is the most logical place that we're looking at that would expect the markets to jump in? Some people say the 4.2 area, this one here, which could be, absolutely. There's nothing to say that this is not the area. Absolutely. But the most logical place is this one here, is 4.789. That's the most logical place for it to stop. That's the most logical place. And remember, with trading, we look at logic. We're logical people. That's all we're looking for the market to do exactly what we want it to do. That's all we want to do, is just repeat itself over and over again. And once the market starts to repeat itself, it's one of these things that we can jump in, we can anticipate, we can avail of that, we can make money out of this. Now, if you are someone who is a short seller, so if you're someone who looks to trade the market down, so you're a short seller, we can look at this and we can anticipate that this is the area it should come back to. Now, it may jump before that. We may even get this and go, well, Henry, it should jump right now. Absolutely, it could. It could jump right this second. We have one cycle, two cycles. But looking at this, what's the probability of, I'm gonna move this out of the way because that was our previous trade. So I'm just going to delete that. So what's the probability of this jumping today or tomorrow at this particular point? High or low? Is that high or low? So of tomorrow's bar turning and popping up. So the idea would be is your entry there above that, your stop loss below. So that would be the idea. Entry, stop loss, looking for the market to pop up. Okay, so the probability of this happening here is quite low. Okay, and can anyone tell me why the probability of this is quite low? Because most of you guys have said that it should bounce there. Because remember, as a trader, we're talking about probabilities, and that's all we're ever looking for. We're looking for patterns, and then once the pattern presents itself, we are then looking for probabilities in particular areas. And if the probability is correct and is weighted in our favor, then we take that trade. And anyone who said a big red bar was correct. That's a big selling day, isn't it? We zoom in on that. That today is a big selling day. That's today's bar. It's a pretty big movement already. It's telling us that there's more sellers in the market now today. Now, this bar may eventually finish a low test bar. That may happen. 100% that may happen. But the idea is at this particular point, the probability of this turning is quite low. So for me, that is quite low. So the idea would be is that I'm looking for other opportunities. And for me, the best opportunity is down here. It's down in that little area. There. That for me is the correct area, down around here somewhere. That would be the area where we're looking to come down to. It would be a double bottom. The overall momentum would be up. And it'd be a key level that buyers would be looking on, well, this is where I want to get in. Now, can we guarantee it'll go up? Absolutely not, we cannot. But it'd be a key area where we're looking at, because what happened when it hit this level before? It went up. So historically, we can see that this is a buying zone, this level. Whereas this one, because of the price action here, no. And the same with this one, the same would apply over here. So if we look at this bar and then we look at this red bar here, there's not a huge amount of difference. So if we look at both of those, there's not a huge amount of difference, is there? So what is the key difference between this bar and this area here? What's the key difference? What's the key difference? Because the size of the bar, they're probably more or less the same size. There's not a whole lot of difference between those two bars. I'll actually just measure the bar. Entry there above it. Stop loss there below it. So that's more or less the same size as the bar. I'll put it over here, put it at the entry. Yeah, look, the bars are more or less the same size. There's not a whole lot of difference between those two bars. So what is the main difference? This bar here and this one, there's very little difference. Now, yes, there's more of a body on this one, and there's a little wick on the top and the bottom, because when we're talking about the bar, we have to add the likes of the wick in. So we have to add the wick in, because that's the top of the bar and that's the bottom. Same with this one, this is the bottom and that's the top. So we're adding in the wick as well. So the only difference here is the actual next bar. See the next bar? Next bar is an inside bar. So we've had a big amount of sellers here. The next bar is an inside bar. Now, if this one turns into an inside bar here, then my thinking process will change here. thinking process will change. So here we expected this to continue going down. So at this particular point, we expected it to go down. Absolutely would not have taken that trade there. And then, bam, we have this inside bar. Now, there's a couple of reasons for this inside bar. It may be that the market was, that the US market was on holiday. It may be that the European market was on holiday. Okay, that may be the first thing. Second thing is that it may be that the markets are unsure on what's going on. No one knows whether this is going to go up or down, which means then we have this really small bar. And that is a key area. That's a key ingredient of what we're looking for, that inside bar. And at that inside bar, then we had a break and retest. And that was the reasoning for taking that trade right there. So at this particular moment, under no circumstance will be taking that trade. But remember, this bar hasn't finished yet. That bar will finish later on today, and then we'll assess if it ends up a low test. So this ends up at the top 1/3 of the candlestick. Then we take that. We're looking to take it. If it finishes a selling day like this, I am not interested in it. If tomorrow is an inside bar like this one, it is a potential trade. But if tomorrow is a selling day and it comes down closer, this is the area. Okay, so it depends on what price action tells us here. Even though, yes, this meets the rules. So I have 5 different rules. So rule number 1 is trend. Look, we have the overall trend going up. 2 clear cycles. 1, 2. Rule number 3, highs and lows. So there's a low, there's a high, higher low, higher high, higher low. 4, support and resistance, bounce, gone up, bounce, gone up, bounce, gone up. And then the last one is price action. And if I don't have a correct price action here, I don't take that. So it depends on how much incorporation you put into price action. But from my trading experience looking at this, this doesn't look like a place that I'd be looking to enter in. It looks like to be more momentum to the downside. So you would wait till tomorrow finish, which means you would probably look at this Thursday to trade. Absolutely. If this turns around tomorrow and takes off, we get a big engulfing bar tomorrow, it just means I've missed the trade. Just means I've missed the trade. But the thing with trading is there's always an opportunity. If you go looking through the market, you will find an opportunity literally within minutes. So the idea is to find an opportunity that meets the rules, that jumps out at you, rather than making one fit the rules. And that's the idea. So today I will have a look at if it finishes a low test. So remember, anyone who doesn't know what a low test looks like, just to give everyone, because I assume everyone knows, but I can't assume. So a low test, so a low test bar is a bar like that. So we would expect the close. So there's the close on the round. So I would expect the close to finish back up there. So the open and the close in the top 1/3 of that bar. Okay, so that's what we're looking for. The finish in the top 1/3. If it finishes in the top 1/3, then that would be a go today. But if it finishes down here where it is, that would not be a trade. If I then get some sort of an inside bar, whether it finishes like that or not, I would then potentially look at that. So rule number 4 is support and resistance. So this is SNR. So SNR is, it doesn't matter whether it's a horizontal like this one or whether it's a trend line like this one. I have to have it bouncing in an area. So rule number 1 is trend line, or is trend. Rule number 2 is cycles by 2. You need 2 of them. Rule number 3 is highs and lows, depending on what direction we're going in. So rule number 4 is S&R. I have to have a reason for this to bounce. There has to be a reason for that to turn around. And then rule number 5 is price action. So they are my 5 rules. Trend, cyclicity by 2, horizontal are highs and lows. So there's a low, there's a high. This is a higher low because it's higher than that one. This is a higher high because it is higher than that one. And this is a potential higher low because it's higher than that one. Now, so this trade meets all the rules except the price action one. So I will wait to see what happens here on price action. But again, the opposite happens. So if you are someone who believes that this is so just imagine you are someone who believes this is a short. You are expecting this to break this trend line and run down to here. There's nothing stopping you dropping down to the smaller time frame and trading this down into this blue box. Okay, so just because this is an upward trend doesn't mean that we can't trade this. We then drop down to the smaller time frames. We should never be trading this short on this time frame. So we should always be looking to trade this short on a much smaller time frame. So if I drop down here to say the 4 hour, we're starting to see a little bit of a phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1. Or you can go a little more broader than that. You can go phase 1, phase 2, phase 1. Okay. Well, this is a phase 1, phase 2, but this here is not a phase 2. I don't have 3 bars getting higher sideways. So this is all part of the same phase 1. So the idea would be is if we are looking to trade this, we have phase 1, phase 2, phase 1, phase 2, phase 1. Now, I can see across here that we actually have a pretty decent level there. So ideally, I'd want that to continue coming down and then back into that area. And if it came back into that area, what would I do at that particular point? We're looking at shorter market down into that blue box there. But again, is this a high probability trade? No, it's not. But there is an opportunity there on the smaller time frames. Just because we're trading long-term long doesn't mean that we can't trade these short-term trades as well in the meantime. So remember, every single trade that we ever take, there's always a secondary theory to it as well, that there's still money to be made on the shorter time frames. We can still trade these absolutely at the smaller time frames. We can look to get in and get out, but it just comes down to what type of trader you are. So if I get a break and retest back to this point, that would be a really good position to potentially short the market. But only time will tell. Is it a massively high probability trade? No. Is it something that I would necessarily do? No. But again, if you feel that the market is going to drop down to that to that daily level. There's nothing stopping you, is there? What did we talk about earlier on? There was something that someone mentioned earlier on. Crocs. So let's actually have a look at Crocs. There we are. So we have Crocs at the moment, and we have this sort of downward trend at the moment. I say downward trend. It has broken the upward trend at the minute. So are we looking to buy this at the moment? Is this something we're looking to buy? So the general consensus is this doesn't meet my rules anymore. Why? Because see this low? It's made a lower low. So it doesn't meet my rules. But on the other side of it, I can see we've had a drop in the market, haven't we? I can see the market has dropped from here, which was 163 quid. It's now down at 125. So that's dropped 40 quid. Okay, so we've had about a 25% drop on that. That's good for us. That's exactly what we're looking for. That's the idea. That's what we're looking for, the likes of that. We're looking for this to drop. We're looking for it to come down to an area that we're happy to take it. Does that make sense? And once the likes of these drops come down into areas, that's what we're looking to jump in. Now, what we have to do is to try and pinpoint a couple of areas. Now, this is where it gets a little more difficult. Because the market is dropping, we need a pretty good level that jumps out of this. Now, can anyone tell me where is there a jump out level for this to potentially stop? Okay. Remember, these levels have to be pretty simple for people to see it. So we have 108. Was the first level that someone said. 108. Okay. Someone said 70. Absolutely. Someone said a 127. Nope, 127 is not a level. 118. Let's have a quick look. 118. Okay, yes, there's a level at 118. 96 or 92. Absolutely. Good. So we have a few of those levels. There's one more that no one has jumped out and said. There's one more. Perfect. Trend line. There's one more. Hence why I am that zoomed out. Hence why I'm that zoomed out. Okay, so now let's have a look. Let's have a look at these levels because there's none of those levels wrong. They're all absolutely spot on. They're all absolutely spot on. Now, which of these levels do you think has the highest probability? So we're going to name this one A, B, C, D. Okay, which one do you think has the highest probability of the market jumping? A, B, C, or D? So, so most people have said B so far. Then we've had a couple A first. Then we've had two A's. Most people are saying B. Some are saying A. Oh, we've had a new player in the game. We had D. Okay, so this is where trading sort of comes into play. Okay. So out of the three of them, so I asked you which one do you think it will bounce off of? Okay. I asked you which one do you think it'll bounce off? Now I'm going to ask you now a different question. Which level do you think is the strongest level? Now, just because it bounces off a level doesn't necessarily mean it's the strongest one. It doesn't necessarily mean it's the strongest one. So yes, the general consensus is B, okay, this area. So the general consensus is B is the strongest area. Absolutely, it is 100% the strongest area. We have a culmination of our trend line and our horizontal level. So not only are we looking at trend-based traders looking in this area, we're also looking at traders who are trading horizontal levels. So for me, the best one to take is B. Now, I asked you which one has the highest probability of bouncing. Well, the one that has the highest probability of bouncing is A. Because when the market comes down to here, that's the first resistance level it's going to get. You will have all the people who are looking at this and going, this only goes up, it only goes up, it only goes up, and it'll bounce there. Now, the question is will we have the same little bounce that we had there? Because look, we had one buying day, and then we had another bar up. So we actually had a little bounce there. We actually had two bars. So anyone who can't see that, we had a big red bar, then we had an inside bar, then we had a green bar, and then we had an actual high test bar here. So we actually had two buying days at this particular point. Now, will we just get a small little bounce like that and then continue down? That is the question. Or will that now hit there and continue up? So the highest probability of bounce is this one, is A. The problem is what type of bounce will we get? This B is the strongest level. The strongest level. But also, if we get back to B, look what else is potentially coming up. So not only are we looking at potential technical analysis, we then have to have a look at some sort of earnings as well. This is the only time of the year, I say the only time of the year, the only time I actually look at the likes of fundamentals. Once something like this is happening, once we're getting into a technical setup and there's earnings. So for me, once we get back in this level, you have to Google what is the expected Crocs earnings. 100%, you have to look into it. Now we've had earnings here. We had a spike. We had earnings here. We had a spike. We had earnings here. Now it didn't gap, but the market went up directly afterwards. And here we didn't get a gap, but the market went up directly afterwards. And that was because earnings was very good. Now, what happens if the earnings is exactly what expected? So just say the earnings was £1 per share. That was the expected earnings. And the actual earnings were £1 per share. What would you expect to happen to this stock? Do I think it will close the gap in C? That is no. That is an absolute, that has irrelevant to what's going on today. So drop, consolidation. Absolutely, I would expect this to drop if earnings comes in on point. Now, just say, for instance, earnings then comes in at 10% up. What happens if earnings comes in 10% up? Okay, people are saying up, up, up. Even if this comes in at 10% up, I would still expect this to drop. I would still expect this to drop. Is Crocs overvalued? Is it overvalued for where the price is right now? Absolutely, the stock price is overvalued. So for this to continue going, I would expect at least a 20 or a 30% jump in the earnings for this to continue going at the same rate of knots. Now we're just talking here on an earnings increase. I'm not talking about these technical levels as well at the same time. I am literally just talking about an earnings increase. That's all I'm talking about. Now, if we end up having the technical setup and we have an earnings increase here at the same time, perfect, you have a win-win situation. That's what happened with our first trade on Morgan Stanley. We ended up having a technical and we had a fundamental news all at the one time, and it took off. But anything under a 30% jump or a 20% price or a share price increase, I would expect this to sort of continue coming down. This whole run is all due to astronomical earnings. The earnings have been much, much higher than expected. So just take that into consideration as well if you're looking to take this trade or any trade for that matter, okay? Or for any trade for that matter. So the idea would be I would expect some sort of bounce here at this level, and history would tell me that we'll get some sort of dog leg up and then continue coming down. That is my opinion. Now, again, I'm often wrong. And as you can see from my trading, I'm right 54% of the time and 57% of the time, depending on whether you're looking at Naga or eToro. So I could be wrong, but I would expect the hit here, have some sort of momentum to the upside, and then come back down again. And then this is where we would either get a consolidation like we did here. We got a consolidation, and then from the back of the earnings, it then jumped up, or we will get some sort of a movement to the upside. Is there much more downside here? I don't expect huge downside after this particular one, but there obviously is. I think this is too far away from B to C. I think it's too far away for it to hit here. We do have a much softer level along here. So I do think there is a potential softer level in there. But again, it's one of these ones where if it comes down to anywhere at these points here, we'd be looking to buy the underlying asset. I would be still happy to take a CFD trade here, but anything below that would have to be an underlying asset for me. And why this will be an underlying asset is because it is now broken trend, and I am now just wanting to be in this as it starts to turn. Does that make sense? Has anyone got any questions on that? Anything there that people don't understand? And just so we can zoom in and have a quick look at what went on here. So from this level here, look, it hit it. We had a selling day. We then had our inside day. We had a buying day, and then it popped up. So we actually had a bounce to the upside, and then it continued coming down. And if you are like on the previous one, if you're wholehearted think this is going to come down to this trend line, you could actually short that on the smaller time frame again, like the rest of them. Okay, you can short it on the smaller time frame. Again, look, we have phase one, phase two, phase one. If that pops up to that little floor there, all right, there, pops back up there, we can actually short this again. Okay, so it pops up there, we look to short that. So just giving you the little heads up on how to actually incorporate trending versus counter trend versus how to actually try to anticipate what's going on in the market. So we have these levels, which are all correct. We have the trend line. And for me, this one is a stronger one. And that would be the one I would wait to take my trade off of. Would I take a trade here? No, because I would expect the same thing to happen here, is a bounce and then a pullback. And then because we're getting close to earnings at that particular point, we would have to take earnings into consideration. So the NASDAQ. So the NASDAQ has sort of had this little bit of a consolidation. It has sort of been messing around a little bit. So we don't know whether it's going to be a selling day, a buying day. I looked at this morning and my first thought was, oh crap, we're going to be stopped out of Morgan Stanley. That was my first thought. And also out of Starbucks. Now I see today, I'm going, oh, that's a little bit promising. Is the market tried to go down and it looks like the buyers try to push it up. But if we drop down into the smaller timeframes here and actually have a look at how the days are actually forming. So yesterday, the buyers took off and then the sellers took over. So we're having this buy, sell, buy, sell, buy, sell. There's an argument going on at the moment between the buyers and the sellers, and we don't know which one is going to win at the particular moment. We just have to take it literally hour by hour, sort of day by day. So we can see today. So we can see today, The sellers started off pushing it down, and then the buyers took over. Whereas if we look at yesterday, look, buyers took over, and up was looking quite bullish, and then the sellers took over. So we're getting this. We don't know what's going on day to day. Now the market will open at 2:30. So again, this will give us a huge indication of what's going to happen throughout the day. But what has generally happened is we get a general movement when the market opens, and then shortly before the close, we then get another movement in a particular direction. Okay, so at the present moment, there seems to be two sort of waves of trading: when the market opens and then before the market closes. So that's what we seem to be getting at the present moment. But again, let's see. We have a phase one, phase two. Is this the point now where it's going to start taking off again to the upside? But again, it's promising. It's promising. We're not having big red selling days. And I know this bar hasn't opened yet. We're only talking about the pre-market. But again, this is quite promising. But as we've seen across the market, pre-market and what actually happens in the day is very, very different. So same with the S&P 500. We've had this really nice low test bar, and the market has now sort of popped up to the upside a little bit. So it'll be interesting to see if the bar finishes like this. This is very promising for the next day, but let's see. And the same with the Dow. We've had this big low test bar, but the good news is it doesn't seem to be dropping down. Yeah, the volumes are low, but when the market is like this, we're always going to have low volume. When we have this argument going on, the volume is always going to be low. Once we have a clear direction, we have much more volume in the market. Why? Because we have confidence. So once we start making higher highs, that's when the rest of the volume will start coming into the market. But remember, low volume is pretty good for the likes of buyers. Why? Because it means the sellers are unsure. And if the sellers are unsure, then overall, the market slowly goes up. And if we slowly start teetering up, eventually what happens is you fake it till you make it. And the people that are unsure about it going up, and all of a sudden, then we're up here again. So if I have a look at Morgan Stanley NS, if we look where we finished up, so our stop loss is here. So look where we finished up. We're literally at the same point as we finished up yesterday. So we're pretty close to our stop loss, I think. Out of risking 100 quid, I think I'm down 70 quid on it. So we're pretty close to our stop loss. And then if I look at Starbucks, I'm about what, 1/3 of the way towards my stop loss. It looks like we're going to open a little bit higher than where we closed, but the same happened yesterday. We opened, we went up, and then we had a big sell-off to the downside. So again, we have this sort of consolidation going on here, and it's just a matter of whether Starbucks will take off without me or with me. It's as simple as that. Just going to sit and hold and see what happens. It'll be interesting to see what happens now with earnings. Will I be still in the market by the time the earnings comes out? And whether the earnings are better than expected, lower than expected. But again, I got into it to trade at the beginning of the month, and the earnings is at the end of the month. So time will tell as well with this one. So it's one of these ones that we just need to sit and hold now. I talked to you guys about potential sort of Gazprom. Okay, anyone who trades with eToro has access to this Gazprom. So we have had the oil industry has just continued to grow. We have had a little bit of a sell-off on the likes of natural gas, as you've seen, and we've had 2 big selling days, and then we've had 1, 2, 3. So just assume today's bar finishes like that. So just assume today's bar finishes. we've had 1, 2, we've had this little tiny consolidation. Is that something that you guys would be interested in as a long? Now, does this meet the rules? Absolutely not. We're taking this as we are jumping in a little bit on the likes of momentum. We are looking at this as a consolidation here, and we're looking for momentum to the upside. So this doesn't meet much of the rules. It meets trending, it meets cyclicity, but it doesn't meet rule number 4, which is bouncing off support and resistance. But what we have here is we have these 3 days of consolidation, 3 days of consolidation with the likes of price action here. So it tells me that the sellers were trying to push it down, and we now actually have an argument between the buyers and the sellers are not massively taking over here, which would then indicate that this could be the next point for the buyers to take up. And you could have a look at the pivot point. Let me see. I'll maybe taking off eToro now. I know it was on eToro. I know, there we are, Gazprom. I'm just spelling it wrong. I'm spelling with an S. So chart. So we go line studies 2, pivot points. Okay, so the daily pivot, or I say the monthly pivot, we're miles away. So the monthly pivot is back down here. So if we drop down to the daily pivot, so the daily pivot is on the 4 hour, and the daily pivot is actually above it here. So if you're someone who was looking to trade pivot points on the 4 hour, so this is the daily pivot and it's on the 4 hour, whereas the other one was the monthly pivot that was on the daily chart. So this one here, entry will be above here and your stop loss will be below it if you were looking to trade the pivot points here on this. Which will be a similar entry to what we talked about here. So entry is, okay, so a very similar entry to what we were looking at. So anyone who was looking to take that, then we have a few opportunities on the likes of this. Now, is this something that you guys would look at? Does this meet your type of criteria for trading, or is this something that you would steer clear of? So the general consensus is trade, no thanks, and wait. So everyone is on the fence on that particular one. But again, it comes down to personal preference. Some people that will look like an absolute great trade. Some people like, oh, Henry, no, it's absolutely crap. No, it's definitely not something I'm looking at. What would you do? So it's tempting. It's tempting. It looks like a really nice trade. So would I take it? No. It's difference between trading technical analysis and then trading your gut with a little bit of technical analysis, if that makes sense. This would be sort of my gut telling me that this looks to go up. Price action is telling me this is going to go up. But when I look at the trend itself, it hasn't come back to an area for me to trade. It hasn't come back to a technical reason. If I took this trade and it was a loss, I'd be absolutely livid with myself. So it's better off to not to take the likes of those trades because of it. Now, if it takes off and this runs 10 to 1, under no circumstance am I going, oh, sugar, I should have taken that. I don't. This is not because it doesn't meet my rules. Where some people go, oh, Henry talked about it, I should have taken it. but there was a reason you didn't take it. And if it runs then and you've missed it, so be it. It's not the end of the world. So let's have a quick look at crypto, BTC. So it hasn't really done a whole lot since we last talked. Hasn't done a whole lot since we last talked. It is more or less kept the same. We're on the 56. We're on the 56K mark. So last Tuesday we were here around the 55 mark. We're now here at the 66, 67K mark. So it's slowly going up. As long as it's going up, who sort of cares? There is, if it just keeps nice and slowly, that's exactly sort of what we're looking for. For me, the next key area up here is this one. There's a top 64.8. That, look, if it hits there, we will something massive will happen. It'll either smash through that level or it will bounce. The higher probability is that it will bounce. Can anyone tell me why there's a higher probability of it bouncing here than it did when it smashed through the 20K level? Can anyone hazard a guess why? So can anyone hazard a guess why there's a higher probability of it bouncing here and coming down than it did when it hit the 20K level again? Yeah, but remember, I don't mean now, I mean back in when it hit the 20,000 mark. So when it hit here. So when it hit here, we had a really small bounce and a smash through it. So that's the example that I'm saying here. So we had this little touch here, and then it dropped. I went from 21,000 down to 17, and then it popped through, it smashed through. So why is there less likelihood of it smashing through here than here? Someone said US dollar. Okay, crypto has absolutely nothing to do with US dollar. Well, there's a couple of reasons. One, it is, someone said, more mainstream. Okay, so I'm going to flesh that out a little bit. So it'll be more mainstream, and in the sense that there will be more funds, people like that will have shorts at this high. There will be short sells at that particular high. Now, but the main reason is the momentum. Look at the momentum it had hitting this 21K. Now, this had ran from 3,000 the whole way up, or even if you went from here, so 9,000, look at the momentum we've had here. We had just this, we had very little pullbacks in that. Very little pullbacks here. So if we go over to this one, we're not having that same run. We're not having that same momentum. We are here in the first phase one. It's not overextended. Even if it hits this head here, it's not massively overextended. Whereas the other one had run from 9,000 up to 21,000, which in crypto terms, that's what, 110%. So this has gone from 42 or even 39 up to 60, which is, it doesn't have the same momentum at the moment. So that's the big difference. It doesn't have the same drive. Now, if it hits there and breaks there, it will hit fever point again. Hype will take off, and we could easily run to 100,000 if it breaks this level and there's a huge momentum. But I would expect it to pull back. I'd expect it to drop. And then potentially the second go for me would probably be the most successful to run through here. But I would expect it to have some sort of drop. But it'll be interesting to see what happens when it gets there. But again, if that happens, we have opportunity on the likes of altcoins, the likes of Matic, the likes of Polkadot, the likes of all those other ones there that are still that are still haven't moved, the likes of this one, the likes of ADA, the likes of Litecoin, whichever sort of kind you think has room to the upside. If that pulls back down to this area here, the 1.8, there's huge run on this. And what is Nigel? So we have huge opportunity in those once they happen. Okay. Likes of Ethereum. We want that to pull back into sort of this little area here. If it pulls back, then there's a hugely undervalued. But again, once Bitcoin takes off, remember, alt season happens shortly afterwards. And once we get this alt season, then we have massive runs. What you have Sloan as well, or Shiba, is it? You've Shiba as well. Now, for me, that has to come back massively before we're looking to trade that. But that has to come back down to $9 for me to be even anywhere remotely looking at this. And I fully expect it to come back to here. I do not expect this to continue running. Fully expect this to come back somewhere around here. And then it takes off again. Floki Inu is a new kid on the block. It's a meme coin, not an eToro though. I don't even, I'm assuming I pronounced that correct. So anyone who is on YouTube and you like some of the content here, make sure you click like and follow. And like I said, if you have anyone that is interested in trading, just share the link with them. And if you want to jump in on my free course, click on the link in the bio. Look, everyone, it's been an absolute pleasure. Thank you very much. Looking forward to seeing anyone who is on my webinars tomorrow. Anyone that's on the bootcamp, make sure you get that friggin' homework over to me on the bootcamp page, and I will correct the homework very shortly. Look, everyone, it's been a pleasure. Thank you very much. Have a lovely day. Bye-bye.